one and all present online and offline. Welcome to the fourth study circle meeting of the GSTPAM. Today we have a very interesting topic, which is the way ahead in claiming of input tax credit. Without wasting much time, I will hand over to our President, sir, for opening remarks. Sir.
Good afternoon to all. I welcome you all for this fourth study circle meeting hosted by the GSTPM. It's our GSTPM practice. Normally, every month we conduct a study circle meeting for the benefit of the members. I welcome all the members who are virtually present. And today's topic is way ahead of claiming ITC. I would like to thank our managing committee member Aditya for accepting our invitation and guiding us on the subject of way ahead of claiming ITC. I would like to congratulate one of our member, Mr. Advocate Dharmesh Jabanputra. He has ran for the 12th marathon, half marathon for 21 kilometers in the Vasai Virar marathon on Sunday, 11th December 2022. He has been awarded some medal also. I would like to offer him a memento and his medal, what has been given by the Vasai Virar Municipal Corporation. I congratulate him on the behalf of all the GSTPM members. I now hand over the charge to our today's convener, Mr. Umang Talati. Please.
Thank you, sir, and congratulations to our member. Now I'd like to hand over the proceedings to our Secretary Vinod Bhai for introducing our speaker for today and also for certain announcements.
Thank you, Umang Bhai. Before going to the introductions, certain announcements are there regarding the short publication. We are publishing MGST Act along with the taxmen. The advance booking are open. I request all the members present virtually as well as physically take the opportunity of this. As well as we are publishing 5 sets of books at ₹5,555, including that books include RCM, ITC, registrations and returns and maintenance of records. Further, we are also conducting postgraduate diploma along with Maharashtra Law University, Mumbai. Now we are reaching at the international RRC also. For that, we are floating the circular very shortly. And next week, we are holding service tax material on 19 December and hope that our commissioner will be there in this meeting. Now the proper subject. Today's speaker on this study circle meeting is Aditya Seema Pradeep. He is a practicing chartered accountant, specializing in GST matters and practice. He is empaneled as a faculty by ICAI for GST during lectures on GST in seminar of chartered accountant and tax consultant at local as well as regional level, and also before the various state fora. Presented the paper on controversial AIR under GST Act at RRC held at Pondicherry organized by GSTPM. He has been awarded as a best paper writer and presenter at NRC held on Mumbai. He has been presently is a managing committee member his published article in our GST review, as well as the Chamber Patrika on goods and service tax. With this brief introduction, I welcome Sri Aditya Seema for this. I request our president to offer him a memento as a matter of topic. Thank you.
I'd like to. Yeah, I'd like to hand over the proceedings to our speaker today.
Praveen, इकडे
स्टॉप करा ना शेअरिंग
One is there.
और किया डुप्लीकेट करा
नहीं, हाँ डुप्लीकेट करना पड़ेगा.
डुप्लीकेट किया
HDMI लगा हुआ है ना.
यस
जब टेस्टिंग किया था तब चला था.
ओके अभी चल रहा था
एक्सटेंड हो गया वापस. बैक कर दो ना, इधर से बैक चलेगा.
निकल के फिर से लगा
हाँ
समझ रहा तो है.
Recording part of our school.
Moving forward with the session and moving forward with the GST, and after the lots of amendments with respect to ITC that have taken place in the last few budgets. So it is I must mention that it might be a difficult pass, but at the same time, there's nothing going to be much of a work that would be left to the practitioners, or there wouldn't be any options left to the taxpayers than to obey whatever has been given in the law itself. And now with the presentation, we have divided into 2-3 parts. What were the existing provisions, what are going to be the new provisions, what amendments have taken place, and how the amendments or provisions of law have been interpreted by the advanced ruling authorities, to what extent it is everything is going, what are going to be the challenges hereafter, that all we are going to see in this fourth study circle. I am very much thankful to the managing committee of GSTPAM for giving me this opportunity to share my thoughts before this prestigious study circle meeting. So without much normal discussion, we would straight away go with the provisions itself. So the first provision, or that was amended, that was the amendment to the subsection 4 of section 16. Section 16, as we all know, is the section which specifies the eligibility and conditions for claiming input tax credit. So the fourth subsection was amended, that a registered person shall not be entitled to take input tax credit in respect of any invoices or debit note for the supply of goods or services, or both, after the 30th day of November following the end of financial year to which such invoice or debit note pertains to, or furnishing of relevant annual return. That means for a particular financial year, the input tax credit can be claimed till 30th day of November. That means 30th of November of next financial year. And how that can be claimed, there were so many discussions and there were so many doubts raised. So they came up with a press release which specifically said that what amendments have taken place till now. So this 30th day of November has been extended for 5 items. Out of that, for us, for today's relevant chapter is the amendment to section 16 subsection 4, that is the delayed period of claiming any input tax credit for a previous financial year. So then they came up with the press release which stated that whether, the first doubt was raised that whether this amendment, it came in the budget of 2022 and it was made applicable in October, from 1st October 2022, whether it is applicable to the financial year 21-22 or not. So they came up with a clarification that it is all applicable, the all compliances which are there in the amended date of 30th November, it is all applicable to your financial year 21-22. And secondly, the question was raised whether the date of filing of return period up to 30th November, that means the return of November month that is filed on or before, that is the due date for filing the November return is 20th of December, whether it is extended to that or it is extended to 30th November, any return filed from April of 22 or up till October 22 till 30th November. So the second position, they have made it as a clarification that any return for the period April 22 till October 22 filed before November 22, this extended period of 2 months, that is from your 20th October to 30th November, would be applicable. Secondly, the 16.4 is applicable to the returns of financial year 21-22 as well. So not only from April 22 to October 22, but if any return is pending to be filed. That means you are claiming the input tax credit in the particular returns. Let's say it's a April 21 return. So April 21 return, if filed before 30th November of 2022, it will still be considered as a good return. But from April 21 till 31st March 22, if you file the return beyond 30th November, then the period of limitation may be applicable and you may lose out on the input tax credit that is available in your return. So that was the major amendment in section 16.4. As we have all experienced so far, whenever we were closing the books for income tax purpose till 30th September, even we came across much of a credit which was there in the 2B, it was there in the books of accounts, or it was there, it was entered later on. So we all could make the claim. So it is a very welcome amendment which has come. Then with respect to section 16.4, a very interesting AR has come, and triple AR also has come in the last year, in the month of January of 22. It was specifically said, if we go through the wordings of section 16.4, it says that you can claim with in the extended period, but of the credit which invoices or debit note pertains to. So in the case of Vishnu Chemicals Limited, and the supplier was Usha Telecom or something like that, they came up with a very good idea. The idea to go to AR was bad, but the tax planning idea, in my opinion, was a very good one. They had not raised an invoice for the supplies that were made in 2018 and 19. And the period for claiming the input tax rate for the financial year 18-19 has already gone. So what they did, they issued an invoice on 1st April 2020. Invoice pertains to the financial.
No. No audio.
I hope now it is coming.
Yes, it's coming.
Thank you. Then appeal was filed before the triple layer of Andhra Pradesh. Now the question was again raised that whether the section 16.4 envisages the period for which the supply pertains to, or whether the period which invoice pertains to. So for that, the triple AR also held that the advance ruling authority has rightly held that it should be to the supply, it should be to the period when the supply is made, and unfortunate that it has come against the taxpayer. Then whether it is a good invoice, that was asked, and they said that yes, it is a good invoice, but you cannot go beyond the law under section 16(4). And again with that, I think Jayam Supreme Court's case law that ITC is not a right, it is a concession given, etc., etc., etc. In the big 30-page order, they have said that it is a condition. You have overridden the condition. It may be considered as a colorable device, and the input tax credit has been denied just because the invoice was not raised in time. So now with this amended 16(4), all these ARs coming in, it's a question before the forum that many of the times reverse charge payment or reverse charge tax has been paid at the time of departmental audits. And some of the departmental auditors as well have been advising us that you claim the input tax, you pay the RCM now, you prepare the invoice now, I will punish you for late raising of invoice beyond the time of supply provisions. Interest would always be payable. I will levy the penalty for late issue of invoice, and you pass that input tax credit in the current month's 3B and claim the input tax credit thereon. So with these kind of ARs coming in and adjustments that we have been making so far, whether it would be accepted in the future, that remains to be seen. So for reverse charge, it is a major concern because most of the outward supplies are paid there and then and there. If any outward supply has been discovered by the departmental authorities in the audit or inspection or any other proceedings, then anyway it is payable under section 74. So anyway that input tax credit is not allowable. However, any voluntary payment or reverse charge payment, or for that matter even royalty payments have been made for 17, 18, 18, 19, where 5% royalty was paid considering the rate of your crushed sand and everything, and now the GST authorities are asking 18%, differential 13% amount has been recovered by them. So, and they are saying that you may claim the credit. Even with the case of ocean freight, they were saying that you pay the GST now and claim it in the current return of 3B. So whether it will all be allowed with such kind of judgments or such kind of rulings coming in from the AR with respect to that would be interesting to see. Then there's a very good case that is writ petition filed before the Bombay High Court in case of Meta Tanks Private Limited. They have challenged two things. First is that they have challenged the constitutional validity of section 16(4), whether at all it will be constitutionally valid to put such restrictions to claim the input tax credit in a certain period. So that remains to be seen what is the result. And the second argument what they have made is very interesting and very intelligent of the advocate. They have said that 3B up to all these matters are coming up for financial year 17, 18, 18, 19 and 19, 20. They have said that till when the returns were filed or when the 3Bs were filed, not the returns, Rule 60 said that it is just a summary statement. It was not a return at all. In 2019 budget, it was made a retrospective amendment to the Rule 60, and then the 3B was made as a return. So whether that post facto or after happening or after claiming of input tax credit, a law has been amended retrospectively, whether that can be valid. So on these 2 points, it is a very good case going on. And the issue with section 16(4) is that all the unorganized sector who are facing cash crunch has lost this credit. There is no big entity which can fight up or which can hire good lawyers, expensive lawyers, and go to the high courts or even Supreme Courts. So that is the issue that is happening with section 16.4. But it is a very good case. The government, both the union government and the state government have been issued notices. Even Auditor General has been issued notices for this. As of now, the last hearing was, I think, in August, and it is going to come up in January. So keep an eye on this Meta Tiles Private Limited. The latest update I got when I was traveling to Mumbai is that the Safari Retreat case with respect to restriction of ITC on immovable property is was to be heard in December, but it was heard, I think, yesterday or today, and the next date has been given is of 3rd week of January. So we'll keep an eye on that also. It is in Supreme Court. So all these cases, we need to see whatever claims we are making now. We have to be aware of the happenings that are going around us, not only what is our understanding or our interpretation of the law. And we'll also have to think till what extent our clients can fight. So then moving on to the second more important amendment that has taken place to section 16 is the addition of subclause BA. That is, the details of input tax credit in respect of the said supply communicated to such registered person under section 38 has not been restricted. Now this section 38, it is going to be there is a Marathi word for it. It is going to be a kardankar. You will never come to know what is happening beyond your GST system. And the section 38 has imposed such restrictions which are way beyond the control of your supplier also. There are some restrictions, we are going to see the restrictions in detail, but there are some restrictions which are beyond the control of your supplier. He has taken a bona fide registration, he is a genuine taxpayer, he is filing his GSTR1, GSTR3B. Still for a certain period, your ITC may be blocked, and this is going to have a major impact on the working capital of our clients and trade as general. So what are the, we'll first go through the rule 36. What are the documents that are necessary, because many of the rules that have made amendments is your 36.4. So why I have taken this rule 36 as a whole is that there's a lot of confusion going on in the trade as well as with the officers. So there are 5 types of documents on the basis of which you can claim the input tax credit. First is that an invoice issued by the supplier for goods or services or both in accordance with the provisions of section 31. The B clause is also the same. It is the revised invoice. A debit note issued by a supplier. I hope it is visible. Yes. So a C clause is a debit note issued by a supplier in accordance with the provisions of section 34. D and E clauses are important. A bill of entry or any similar document prescribed under the Customs Act 1962 or rules made thereunder for assessment of integrated tax on imports. And then the invoice of ISD, input service distributor, is there. So the section 36, the rule 36.2 has been amended, where it says that input tax credit shall be availed by a person only if all the applicable particulars as specified in the provisions of chapter 6 are contained in the said document, and it is communicated to the taxpayer in GSTR2 that has been removed now with the input tax credit that has come. Then if we say we have been challenged by the officers that there are particulars that are wrong on invoice, on the basis of this sub rule, it has been said that your address is wrong, address is incomplete. In place of big address, there is only Saranpur Road, Nasik has been written. That is not allowed, as they are saying, and they are right if they read the first limb of the provision. There is a proviso which we all must be aware of, is that provided that if the said document does not contain all the specified particulars, that means all these big particulars are not there, but if they contain the details of amount of tax charged, that means whatever tax has been charged from your supplier, description of goods or services, total value of supply of goods or services or both, GSTIN of the supplier and the recipient, that stops here for intrastate supplies. That means whatever supplies you are procuring from within the state, only four contains, if they are there in the invoice, it should still be valid for claiming the input tax credit. What are those? The amount of tax charged, description of goods or services or both, total value of supply of goods or services or both, GSTIN of the supplier and the recipient, and the place of supply is required in case of interstate supplies. That is why it is required, because IGST can be charged to all the interstate supplies, but if you are eligible for credit, the place of supply must be mentioned as Maharashtra, then only you will get the input tax credit. Now we are seeing in your 2B, there are some credits, if place of supply is wrong, it comes to your credit not eligible. So that may happen. That's why it is made mandatory for interstate supply to have the place of supply mentioned on the invoice. For all rest of the invoices, only for particulars, if those are there, then you can show this proviso to the officers. They cannot deny the input tax credit. Address is wrong, some minor mistake is there, then it cannot be it cannot be made as a bad invoice, and input tax credit on this should not be denied to you. Then, as I already mentioned, if any tax has been paid in case of any demands that have been raised, or in case of fraud, willful misstatement or suppression of facts, that means any tax paid under section 74, you would not be getting the input tax credit. Then the major amendment or the rule that has been the most sought after rule, rule 36(4), whether it was applicable when it came into existence, where it was a valid rule, all these questions are there. But with the new section 16(2)(ba) coming into picture, now it is a valid rule. So if you were not following this till 2021, you must follow it now. There is a change in the rule itself, that the no input tax credit shall be available to the registered person in respect of debit notes or invoices or debit notes, details of which are required to be furnished under section subsection 1 of 37. So here it says the details of such invoices or debit notes only. Why I made, or why I incorporated the rule 36(2) here, if you see the documents with respect to import is a bill of entry. Your claim of IGST on imports is on the basis of bill of entries, not on the basis of invoices or debit notes. So even if the details of bill of entries is not appearing in your GSTR 2B, you are still eligible for the input tax credit on the same. It may or it may not come in your GSTR 2B, because it is not a invoice or a debit note issued by your supplier. 36(4) is only with respect to the invoices or debit notes issued by your suppliers located in India, and they are charging you GST. Then the clause B that has come up is that the details of input tax credit in respect of such invoices or debit notes have been communicated to the registered person in form GSTR 2B, where the validity of 2B has been made under sub-rule 7 of rule 60. So what is this rule 60, sub-rule 7? We will see. Prior to that, we will see the amendments which are going to be restricted. The old section 38 of matching, mismatching, etc. has been scrapped, and new section 38 has come up, that is for communication of details of inward supplies and the input tax credit, where it says that even though it is appearing in your auto-populated 2B, there are certain restrictions have been put in subsection 2. First is that the details of inward supplies in respect of which the input tax credit may be restricted, even though it is appearing in your 2B, it is restricted in 5 scenarios. First of that is that by any registered person within such period of taking registration as may be prescribed. That means I am a new taxpayer. I am availing registration today on today. I have got the registration on, let's say, 20th of December. On 20th of December, I start supplying to my customers. I am filing my GSTR1, I am filing my GSTR2B. Still, input tax credit will not be available to my recipients for a specific period. What period is that? That has not yet been prescribed. It will be prescribed in the rules itself when the GST portal is capable of handling all this information. But as proposed in the budget or in the GST Council meeting minutes, it is going to be for 3 months. So if any of your clients are willing to start any business, get them registered now, so that at least from March their customers will start getting the input tax credit. Let's assume that from 1st January all these rules and the modalities on the GST portal will come. So this is going to be a big hurdle for, not for us, because now what is amended in the rule 60 sub rule 7 we are going to see, it is all going to be auto generated. So it is not going to be a hurdle for ourselves, but for our clients it is definitely going to have an impact on their working capital. Okay. Then by any registered person who has defaulted in payment of tax and where such default has continued for such period as may be prescribed. So if a supplier has defaulted and now he starts paying the tax, still for a specified period that credit will not be available or that default is there. So that means even though he is filing GSTR1, now for only 2 tax periods he can file GSTR1, and he has not been filing GSTR3B or not paying tax at all. That means this is for the second subclause is for the not filing of return at all. He is only filing GSTR1, he is not paying tax in GSTR3B. That credit will also not be available to you on real-time basis. Now, in case of AS70 10s, we are seeing that it is communicated to us now after 4 years, for 2018, 19, 19, 20, they have filed GSTR1, but they have not actually paid the tax. So this will now be restricted real time. It will appear in your 2B, but it will not be available to you. Then the third clause is where a registered person, the output tax payable by whom in accordance with the statement of outward supply, that means the turnover or the tax payable declared in your GSTR1 exceeds the output tax paid by him during the said period by such limit as may be prescribed. So you have disclosed an outward tax liability of, let's assume, 20 lakhs in your GSTR fund, and you have disclosed your outward tax liability as 15 lakhs in your 3B. Whether it is allowed in the system? Yes, it is allowed. It just shows you a red thing and you can still file the return. If this happens, so even that credit will not be allowed to you. How you are going to come to know this? Because you are going to claim GST after he has filed. Later on, mute. Later on, it will be
368350. 83.
so whether you are going to come to know about this short payment and all, it will be recovered along with interest in the next tax periods and then allowed to you as a credit if the default is made good by your supplier. So, and they have given a threshold limit. If there is a rounding of difference or few percentage of difference, it is going to be waived. It is proposed that more than 10% difference is there in the outward tax liability, then that may be restricted, but it will come into black and white. Yes, I'm coming to that. I'm coming to that. In rule, we'll see. This is the section which is giving the authority. How it is going to happen, we'll see in the rules. Then fourth, by any registered persons who during such period as may be prescribed has availed input tax credit of an amount that exceeds the credit that can be availed by him according with the clause A by such limit as may be prescribed. That means this is a very tricky thing. Your supplier has claimed excess credit than what is appearing in his to be by such percentage. That means only 30 lakhs of credit was there in his 2B. He has claimed a credit of 40 lakhs. Then in that percentage ratio, your credit from such supplier is going to be restricted, not disallowed, restricted. If the default is made good, it will be allowed to you. Then fifth, by any registered person who has defaulted in discharging his tax liability in accordance with the provisions of subsection 12 of section 49, subject to the conditions and descriptions as may be prescribed. So this new section 49(12) has come. We are going to discuss it in detail. That is essentially the allowance of credit to the tune of 99% in that rule 86B. So whether that was valid or not, so that for that they have come up with a new subsection 12 of section 49. So if your supplier is binding for that rule 86B and he is not discharging in outward tax liability of 1%, otherwise by way of your input tax credit, still that 1% credit of yours would be restricted. And then the last clause, by any such class of persons as may be prescribed. So this list is going to get bigger and bigger, and it is going to get tougher and tougher. So with this, now whether any matching mismatching concept is going to be there? No. Whether you can communicate to the suppliers that you have not followed these provisions of law? No. All those provisions of matching, mismatching, reversal, reclaim have done away with. Section 42, 43, 43A have been omitted from the Act. And Section 41 has been amended that whatever input tax credit you are claiming in your return, that is your GSTR 3B, is going to be your self-assessed ITC. It is not going to be your provisional ITC. It is going to be your self-assessed ITC. And if you are making any excess claims in that self-assessed ITC, considering all these restrictions and all, you are liable for reversals for that particular period when such defaults are continuing, and when those defaults are made good, you can reclaim this credit. Now again, there is no proviso like there is for the proviso to section 16(2) for your non-payment to creditors within 180 days, that whenever you make the payment you can claim the credit, and restriction under section 16(4) is not applicable to that. Here there is no such provision. So if your suppliers wish to make the defaults good, they have to make it before the 30th November of next year. Beyond that, if section 16(4) wins in the court of law against those cases specified earlier, you will not be able to claim the input tax credit ever. So now Rao sir's question, how this all is going to work? That's why I said our work is getting reduced day by day. As we have seen in case of e-invoices, everything is auto-generated. On a single click of a button, you just need to verify the amount and file your GSTR1. Likewise, your GSTR to be return, which is an auto-generated statement under this new rule, sub-rule 7 of Rule 60, you are going to get all the details. And anything other than your that is allowable to you under this auto-generated return, you will have to reverse by way of maybe system auto-generated invoices. Or if you go beyond the amount that is there in your to be, your customers or the recipients are going to fail under the restrictions that are put under section 38. So nobody henceforth, when this will come into action, nobody will be able to claim a single rupee of input tax credit beyond your auto generated input tax credit. If you do so, whether you will get a notice, maybe, but whether your recipient or your customers are going to lose that credit, yes. So it is a two-way thing, that your suppliers, how they behave with you will determine your behavior with your recipients. So it is going to be a very tricky situation. I hope it comes in a very robust system of information technology. Otherwise, it is going to be a chaos which happened in August 2017 when that actual GSTR2 had come, and we were successfully able to file one GSTR2. But actually, that was a very good system considering the recent amendments that have come up, and now it has all been made self-assessed. And it will be reversed without any questions, or ITC of your recipients or the third chain on down the track will be disallowed. That is going to be a very big hassle. So section 49, payment of tax. Now they have said they have removed all these provisional credit and your matching mismatch concepts. Only with respect to section 41, you will be given a self-assessed input tax credit, and that will be available in your input tax credit ledger. Section 49(2), that has been inserted a new question. Rule 86B, we all know that you cannot go beyond 1% of your outward tax liability with respect to your input tax credit claim is concerned, or availment is not availment, the utilization is concerned. So at least 1% of your outward tax liability you should make in cash. But there was no section which gave powers to this rule 86B, and there were quite a lot of arguments going on between the department and the taxpayers. So they have come up with this rule, section 49. So earlier, if we were saying that no, there is no validity to this rule 86B, it has been given by way of rule 4912, and if you are not following it, now from 1st October 2022, you will have to follow it. So what it says is that it has given a power to the council to specify the maximum proportion of outward tax liability that can be discharged through the electronic credit ledger. As of now, as per rule 86B, the restriction is 1%. That means your 1% of outward tax liability should be paid through cash. And then there are certain exemptions to that. So in that, where the said person, that means the registered taxpayer, may it be a partnership firm or a company or an LLP or whatever the constitution is, or the proprietor or the karta or the managing director of any of its two partners, whole-time directors, members of managing committee of association, board of trustees, as the case may be, have paid more than 1 lakh rupees as income tax under Income Tax Act 1961 in each of the last 2 financial years, for which the time limit to file the return under section 1 of 139 of the said act has expired. Such a critical rule. That means if I am in April 22, I will have to see that they have paid taxes for not 1920 and 2021, because 22 and 22 they have yet to file the returns. We'll have to see if they have paid more than 1 lakh rupee of income tax in the 1920 and 2021 and not 21-22, because the due date for filing income tax return has not lapsed or has not expired. When you come to if it is a non-audit case, your time limit to file the income tax return will end on 31st of July. So you'll have to see after the period of starting from 1st August 22, if you have paid income tax of more than 1 lakh rupees in 2021 and 21-22. For audit cases, the due date will be of 31st October, not 30th September, 31st October. Then again, from 1st November, you will have to see 2021 and 21-22. Before that, you will have to see 1920 and 2021. So it is a very complex thing. But I wish all your clients pay more than 1 lakh rupees income tax in all the years. Then if there are any refund of more than 1 lakh rupees in the previous financial year, and in case of unutilized input tax credit on account of exports or zero rated supplies, or in case of your inverted duty structure, if that is there, then you need not follow this rule. Then this rule is not allowable to government departments, public sector undertakings, a local authority and a statutory body. And the clause D I missed out on, sorry. The registered person has discharged his tax liability towards output tax through the electronic cash ledger for an amount which is in excess of 1% of the total output tax liability applied cumulatively up to the said month in the current financial year. So far, if you have paid more than 1% of the liability, then for the current month, it is not liable. So if you do not pay 1% in the current month cumulatively, from April 22, you will have to calculate till every month end. If it is not going beyond 1% cumulatively, in that month it will be applicable. So how everybody is going to keep a track on this? It's going to be a very difficult task, but it has come, and now you cannot say it does not have a validity. There is no empowerment in the GST Act by way of new section inserted with effect from 1st October 2022. Subsection 12 to section 49, rule 86B cannot be challenged. It has to be followed. So with this, I submit my presentation on the amendments or whatever that is going to come in the coming days. for us to handle with respect to input tax credits. If is there any information, additional information that is available with you with respect to how it is going to operate actually, I am welcome. Otherwise, I am sure that it is going to cause a havoc when all these provisions, rules for these restrictions under section 38 will come into play. So I thank the managing committee and the president of GSTPAM for giving me this opportunity to share all these details on what is kept for us in the, in Cartoon Network we used to see in Tom and Jerry, a person has always carried a food with a covered plate on that. So when that used to uncover, that is, similar kind of thing is going to happen with us. When that is going to be uncovered, I hope it remains closed for a longer period of time. So I thank you for all patient hearing. If there are any questions in the chat box, I would just go through. There's a request. Please repeat last 5 minutes again, but that has come at 2:35. So I assume there are no questions on the online forum with the physical participants. If they wish to share any additional thoughts on the same, they are most welcome. Otherwise, I thank again the yes.
What about quarterly return? Repeat question, repeat one.
So the question has been asked for quarterly return filers, how this date of 30th September, 30th November will be followed. If you delay your return for the period of period ending September, then only it is going to happen. With respect to IFF, you can make the amends, but with respect to claim of input tax credit, you will have to hold the return. And if that way your tax is going to be, ITC is going to be your more than your tax, if you say there will not be any interest, if 86B is applicable to you, on that 1% of tax you will have to pay interest. So there's a cost involved with respect to claim of ITC and interest to be paid.
30th November is the last date to claim the ITC, right? But
yes,
if we really have a return for the month of October, if it is filed by February 23rd, then also we can.
No. See, sir, I think you were not there in the earlier this thing. I'll just go through that slide once again. It is any return filed up to 30th November 2020. Yes, sir. Not able to get.
Earlier for the financial year 18-19, March 18 return was filed beyond that September deadline. And ITC was claimed, which is disallowed by the department at the time of assessment. So whether it is valid or not.
Keep an eye on this case in Bombay High Court, Meta Times, or otherwise form a consortium of all these default cases and file a once and for all case before the High Courts. That is the only rule, because see, officers also have there are also superseding authorities to whom they have to answer. So they will not take that risk unless anything comes in black and white, either by way of a decision or by way of the instructions or by way of an amnesty scheme.
But earlier also 64 doesn't restrict the March return is filed in March.
Sorry?
Earlier also section 16 doesn't restrict if the March return is filed beyond that September deadline.
It that is any return filed after that due date. So if you don't file for that, you will lose out on that ITC. You may lose out on it. I think there are some questions and raised hands.
You want me to answer?
Sir,
Yes.
Institute of Chartered Accountants of India has strongly made representation for amnesty scheme. So I think the best way is to keep the matter live and then wait. If it comes,
Yes.
then
Yes, Umang, can you please unmute the participants? I think the physical attendees are done. Then we can go to.
Hello. Sir, am I audible?
Yes, sir, please.
Yes, sir. Sir, I have only one question on section 38. Section 38(5), it says that the fifth proviso, it says that ITC may not be available on a supplier
Yes, sir, please go
who
ahead.
has failed to pay the tax liability. Who has failed to pay the tax liability. Now, I will say the supplier paid the tax, but whether he has paid my supply or not, how I will know? Say, assuming that he has got the liability of 1 lakh rupees, but he has discharged 60,000 or 70,000 rupees, or he has not paid on certain supplies. How I will know how the department can, refuse my ITC saying that the supplier not paid the tax?
Yes, sir. Sir, that question was asked in the from the physical attendees as well. See, sir, that's why the rule has been amended. I hope the presentation is visible to you. The rule 60 has been amended that all these cases which they want to restrict, it will be an auto-generated statement or auto-generated report. You can take the base of that report and then claim, or you will come to know whether that supplier has paid or not. Actual how it is going to work, there is no sandbox for it, or in I think there is a highest level of confidentiality that has been maintained from the GST network as well as the authorities. So it is the test of time when if at all these provisions will come into picture, we'll have to see, sir. But as of now, I am assuming that since this amendment has come and auto-generated word has been added to section 60, rule 60, sub-rule 7, I hope it will be there in your 2B, how much is allowable, how much or what proportion it is allowable to you.
But in auto-generated rule 67, it is based on GSTR1.
No, it is your GSTR 2B, sir. It is your GSTR.
No, it will come in my GSTR 2B, but the GSTR 2B is based on the supplier GSTR 1. Based on the supply, it is not based on the supplier GSTR 3B.
Sir, they may link the amount of 3B with the 2B, and that's why I'm saying, sir, as of now, there is no black and white clarity on the matter. Let's see how it comes.
Okay. Thank you, sir. Thank you.
Welcome, sir.
Am I audible?
Yes, sir, please.
Aditya, first of all, very good presentation and congratulations for that. During this session, there was some technical problems. The way we are seeing in GST every now and then, the same happened here also. So you might have explained or you might have clarified that, but for this benefit of everybody, I just again want to repeat or to ask you, what is the overriding effect of 16.2 and 16.4? So if 16.2 is overriding 16.4, whether the filing of returns and making payment in time, all those things, whether it before the amendment I'm talking about, whether before the amendment, still whether it will prevail, say for the period 17, 18, 18, 19, 19, 20, so on and so on.
Okay, so with respect to, sir, this matching or with respect to period of limitation?
Both.
Okay. So, sir, with matching, we are after even in the Law and Representation Committee, we have discussed that from 1st January 2021, 16.2 AA was added. Till then, with respect to matching, we are requesting the authorities that the internal circular 2A that has come in February should be extended to all the periods from July 17 to 31st December 21. On all these 2A 3B matching effects will be gone, and we are also requesting the central authorities to issue a similar kind of internal circular or instructions for allowance of that credit, because there was no base as such, as you have rightly pointed out. With respect to section 16.4, yes, that is being like I said, that even in all the orders, whenever we say that it is a right, and they have come up with some Supreme Court cases like Jayam and all, that they are saying that it is a concession. So that is going to be a point of dispute between the authorities and the taxpayers as well as the consultants.
I will just add on that.
Yes,
Means,
sir.
as you all are aware, and you must have read it 1,000 times, because of the not obstante clause of 16.2. 16.2 prescribes 5 conditions, and the moment I fulfill those 5 conditions, I have nothing to do with what supplier is doing and whether he has shown or all those things. So even if he has not filed the return, even my claim, because there is a little differentiation between 16.4 and 16.2 about taking of credit. So based on that, I think we still have some hope about on the limitation aspect. 16.2 will prevail over 16.4. But as you have rightly said, this is a litigative matter. What I'll suggest that don't leave this, means you can, as you are on the forum, appeal everybody that don't leave this point, litigate this matter. End of the day, some decision in our favor is likely to come.
Now, last 2 questions on the chat.
Thank you, Nitin sir. Thank you.
I have a practical issue with this thing. One of my composition dealer has paid tax double. So we have asked for the refund and we have applied for it, and the refund is given also by the authorities, but they have transferred it to the credit ledger of the composition dealer. And now we are saying we are not able to use the credit because he cannot use anything.
Right.
Now they are not able to retrieve it also. But that is, nothing is in our hand, we cannot retrieve it, which has gone to credit ledger. And unfortunately, that amount is gone from my pocket, practically. That is also since last 1 year, I have tried all my best, but I am not succeeding.
So I think it
What
would
is the
be
remedy for it?
the only case in India, I would say, that it has happened. So, so far I have not heard of any such case. But only departmental authorities would be able to guide you, because it is impossible for a composition taxpayer to have an electronic credit ledger at first place.
You know, I have seen this song also from the Kungaru ki tarah bajta hai gaon mein. I have really went to so many authorities, and then that they have also told it is around 45,000 rupees. कि हम सब लोग कुछ ना कुछ contribution निकाल के आपको transfer करके देते हैं. What they do? Really, Sadra Plaza. This is, there is no solution for it.
To the this thing, authorities may not be of much help. Like you will have to write to GSTN. First of all, how it did go there? Because for a composition taxpayer, in my opinion, there shouldn't be a credit ledger, since he is not eligible for the input tax credit at first place.
Human error and later on technical limitations.
Yes. Okay. So
Last 2 questions on the chat box. 3 questions.
So interest under section 50 subsection 1 is applicable in case of reversal of ITC under rule 37 if the sufficient balance available in credit ledger from the date of invoices. So for reversal of ITC, even for rule 37, rule 50 section 50 subsection 3 is applicable, not subsection 51. 51 is only applicable to the interest on outward tax liability that is discharged late. And with the amended section 50 subsection 3, if you have sufficient balance in the electronic credit ledger, you may utilize that, and there would not be any interest liability on you. So ITC for FY 19-20, if return for March 20 is filed beyond 20th October 22, can be claimed. You can claim, but the fate of your allowing the credit would depend on many factors. So, but as Nitin sir had already said, that you claim it and fight for it. If as per 86B 1% tax is not paid is in future dealer have to pay in cash, and will there be any interest or penalty on that? If you do not follow that, there will of course be interest on the cash liability. Penalty may be levied providing the payment. It will be a section 73 assessment. So whenever you pay the tax, it will determine the quantum of penalty. Yes, it will affect your input, your outward supplies and input tax credit of your recipients. How it will affect, those rules are yet to come under section 38 under restrictions of ITC. So in the future it will come, but if you do not do so, it will definitely hamper you as well as your recipient, as I had already mentioned. So I thank and I hope yes.
I have one question, sir. It is one transaction of sale. So basically, in this transaction, we are selling the new batteries to the customer, and against that, we are taking the buyback, the scrap batteries. Okay. So in this case, what they are doing now, in their purchase, they reduce the buyback amount, and and what they say is that thing is as a purchase in your book. So while that we cannot claim the ITC for that invoice because they are not uploading 9 documents on the GST are not to be for that. In this case, how we are going to release the ITC because what we are selling the new batteries, okay, and we cannot exchange the buyback as a credit. We cannot show that thing.
You cannot reduce your value of supply.
So how we can proceed with those things?
So you'll have to insist upon the registered person. See, if it is those are unregistered, then there's no issue of input tax credit.
Actually, they are registered person.
Okay.
What they say now is buyback is not the business we are in. So we cannot give the tax invoice for those things.
So it is not necessary for a person to sell anything. Like I have inverter batteries. If I sell it to you under buyback, I cannot say I am a chartered accountant and I cannot sell you the batteries. It is in the furtherance in the course of business itself. For my business to run, I am having some capital equipment. At one point of time, I am going to sell. Then motor vehicles, for that notifications have come. We all know that it is not our business to trade into motor vehicles. Still, it is liable for tax. Whatever motor vehicles are there, or any asset in your fixed asset schedule, that is not your business. So insist upon them that even though it is not your business, it is in the course of business. So they will have to issue.
So they have to issue tax invoice.
Yes,
right?
yes.
There is no other what they are existing right now. It is not correct.
Yes. Or else what you can do is let them have their own taste of their adjustment. You charge them on full value of supply and reduce only that amount. Don't reduce the GST amount. Reduce only the while making payment or while. So you can not reduce the GST amount from your deduction of buyback.
Instead of booking it as a purchase, directly reduce that buyback amount from the sales invoice.
No.
Sorry.
While see, you are selling me 100 rupees, 200 rupees of battery. I am giving you 50 rupees in buyback. Right? You are. I am charging you 236 rupees. You are charging me 59 rupees. So don't reduce 59 rupees. Reduce 50 rupees.
When making payment, 9 rupees don't give us. Is what I say. Purchase नहीं book करो. Purchase नहीं book करो. 50 book करो.
वो भरता है नहीं भरता है is his loss. वो 9 रुपया वो भरता है नहीं भरता है is his loss.
Purchase में 50 book करो. 9 book की मत.
Same day air conditioner.
Every electronics everywhere it is the same. वो बैटरी में क्या है वो दिखाना पड़ता है. एयर कंडीशनर में कोई दिखाता नहीं. वो इश्यू है. बैटरी में क्या बायबैक उसको दिखाना पड़ता है बिकॉज यू कैन नॉट मतलब वो उसको डिस्कार्ड नहीं कर सकते इसलिए.
One more thing, like we have got one case where in 2021 we have raised the GST amount on the customers different GST number. For example, they have two registration in Gujarat, one for the public and second is for Anjal location. So according to PO, we have to pay the GST on Mapi location, but mistakenly we have paid it on Anjal location. And this case has come in scenario in this year, that is 22-23. So is there anything that we can do in this case instead of closing the ITC?
Unless anything comes in black and white for the from the government, it is difficult. Yeah, so, हाँ बट वो अभी फिजिकल भी तो मूवमेंट होना चाहिए ना, ई-वे बिल का वगैरह सब लगा है.
Section 38 का जो admission आपण होते ना जो first restriction तरी टाकलं त्या ठिकाणी नवीन registration असेल supplier त्या केस मध्ये restriction टाकली तर त्या ठिकाणी प्रत्येक नवीन registration च्या केस मध्ये प्रॉब्लेम नाही. त्या केस मध्ये बोगस registration आहे किंवा ज्या ठिकाणी त्यांना वाटते की doubtful registration आहे, in that case only restriction has been provided. सगळ्या केस मध्ये नाही होणार. आणि ती विष्णू ते ऍडव्हान्स करून ते सांगितले ना तशी इंटरेस्टिंग आहे. म्हणजे ज्या ठिकाणी यूज होतोय आयटीसी पण ते थोडं कठीण आहे कारण का त्यामध्ये ईडीएस चे पण प्रोव्हिजन्स येत आहेत अंडर इन्कम टॅक्स ॲज वेल एज तुमचं रेव्हेन्यू रिकॉग्निशनचा पण इश्यू घेईल. म्हणजे तुम्ही नेक्स्ट इयर मध्ये तो
रेव्हेन्यू मी रिकॉग्नाइज केला, सगळं केलं. मी इनवॉइस फक्त उशिरा केलं. I have defaulted in issuing the invoice. You charge me penalty for late issue of invoice. I am ready to pay the interest, but I am not ready to forego the ITC because ITC amount is huge.
बरोबर, पण त्या केस मध्ये त्याने कुठच्या सेक्शनच्या अंडर ते आयटीसी डिसाल्व केला. कारण मी लेट इनवॉइस इश्यू केले असेल तर अकॉर्डिंग टू टाइम ऑफ सप्लाय जे काय असेल ते इंटरेस्ट जे काय
त्यांनी तेच केलं ना की इट इज इनवॉइस पर्टेन टू और डेबिट नोट पर्टेन टू अ फायनान्शियल इयर नाही, इट इज सप्लाय पर्टेन टू असं त्यांनी interpret केलं. It is, I hope it gets challenged in the court of law, but as of now I don't have any the current update of this case. It was there, it had come in January of 2022. After that I am not aware of what has gone into the case. So with this I hope all the queries online and offline are off. Okay.
Last question. Yeah, see, person is starting new business and apply for the new registration, but meanwhile is whatever the starting purchases and is getting the invoice. And he gets the registration everything 30 days. Which is getting to the after some time. Then as per the law, is eligible for the income tax credit, but what will happen to this kind of?
See, there is a from the date of you become liable for payment of GST until the date of granting registration. As on the date of your liability arises, you can file ITC 01 form and claim the input tax credit on stock as well as capital goods available as on that date. It is there in section 18. So I hope all the queries are done online, offline, and I would leave the charge. Yes.
Respect petitioner and other office bearers. Aditya has nicely explained all the things. He has given a different angle and different view to claim the ITC, and he has literally satisfied all brains of all participants virtually and physically. Thank you, Aditya, and all the associates and participants for this nice lecture. Thank you very much.
I request everyone to rise for the national anthem.
भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा
विंध्य हिमाचल यमुना गंगा उज्जल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 जय
Thank you. With this, we conclude today's proceedings.